Okay, we are live. We are live. So it looks like Powell signaled the start of the cutting cycle, right? We knew it was coming. We called it from before. Um, we called it before, but now Powell's going to start cutting in September. We don't know if it's going to be 25 basis points, 50 basis points. Some people are saying that he left out how fast he was going to cut if he needed to. And we're going to take a look at markets and see exactly how they're responding in the short term. We'll start with the S&P this morning. We can see clearly the S&P is finding some resistance here, right? I know some people thought it was going to break out straight to all-time highs, but we're still, the S&P has some consolidation to get through, and we're still data dependent here. The market is still going to be data dependent until that September cut. That cut isn't till what, mid-September. So you still have another 3 weeks before that cut actually shows up, which means the market needs to find balance. Maybe it does get above. I think we're going to be consolidating. I think we're still a little overheated. There are some risks still, in the cycle. Any type of pullback, any significant pullback should be a strong buying opportunity. If we do, Fibonacci 545 is something we could come back to. I know the Powell triggered the cuts, but the market can still retrace and wait for those cuts to actually be implemented, right? We can always come back, retest some level before we actually break out. So I would still keep my guard up. I know a lot of people are selling volatility. If we go to the VIX, right? The VIX is pretty subdued. The VIX ain't going nowhere. It's starting to cool down a bit, but it's still above 15. So the market is not, completely relaxed yet. Once we get the VIX below 15, actually, let's go back to that daily chart or the 4-hour. Once we get the VIX below 15, then it's pretty much clear from there that the market is ready to step back into the bull trend. Okay. Where's our 20 level? Why isn't it marked on here? Should have been marked on here. Okay, well, 15 is that level. So we really have two levels. 15, I don't know where's the other level at? Should have been on here. 15 and 20 is what we're looking at for the VIX to really get long here. If we get below 15, it's all bullishness from there. But I still think we have some volatility in the market. Obviously, we haven't broken out yet. Jobless claims. So what is the market going to be focused on? It's going to be focused on jobless claims going forward because it is not over yet. It's still there's still a possibility that the employment picture decelerates too quickly, right? We don't need emergency cuts yet, but it's still a possibility that we decelerate a lot more, a lot quicker than we expect. So watch the VIX, how it responds in the morning, in the afternoon. That's giving you sentiment. The VIX is going to move and the S&P is going to move a lot quicker than the actual data does. So we're looking for jobless claims going forward. Look at jobless claims. We also have GDP next month. Is it going to come in line or, below expectations, above expectations? Right? Now, the other part is the Qs are also, the Qs are a lot weaker. Tech is a lot weaker than the S&P. And the narrative is, hey, maybe the Qs sort of rest here for a while before, even though they're cutting, maybe the Qs rest and we actually see riskier assets pick up because they have been pretty much lagging for a while. We've had a lot of lagging. Okay, there we go. We got some risk assets moving up. We've had a lot of home, small caps, whoever it is, home builders, crypto, right? Crypto needs cuts. I know there's a strong narrative, but crypto is going to need cuts at this point. So we're looking for that. But let's go through, let's see what the macro is telling us right now. Okay. Oil is one of those big risks. Oil is still consolidating. It doesn't look like oil is going to break out. That's a good sign, right? Inflation is pretty much from the energy sector or from oil prices. You're not going to see inflation really break out unless the war comes. This is always a risk. It doesn't look like it's showing its face. 10-year yields, right? These are interest rates to the market just completely rolling over. So the market is actually easing ahead of the Fed. The market is what is providing very supportive financial conditions for the economy and for risk assets in general. Okay. So, what does that mean? That means small caps, banks, home builders, construction, everything that uses financing is going to benefit from rates continually falling, right? These are bond rates. They're going to benefit from that. Therefore, a lot of people are looking at small caps, right, over big tech. I think they both go higher, but small caps might have a little more momentum because they're already so under owned at the moment. All right. They're already under owned. So we'll see. Nvidia earnings are going to make a big telltale where you should go because Nvidia needs to have guidance a lot stronger than expectations for that trend to really outperform the small caps. Okay. The dollar, this is a big one. Okay. Especially if you're in crypto or you're in any type of risk asset, the dollar is starting to tank. It's getting back to that lower level, but the dollar is pretty much tanking. Okay. That trend already broke for the dollar. It's signaling the easing cycle is here. And just keep in mind the biggest moves in crypto, the biggest moves in markets and risk assets happen when the dollar is easing, because an easing dollar is signaling the debasement of currency. It is signaling monetization of the economy. It's signaling that the central bank is now providing more liquidity, and that liquidity is coming from the dollar, right? So nobody wants to own the dollar. They're cutting rates. It's time. Any pullback on the S&P, any pullback on the Qs that is significant is a buying opportunity in my view. All right. Now let's go over to bonds. I think this is a sleeper here. A lot of people are sleeping on the bond market. Usually people don't really invest in bonds, but bonds are providing a very good return here. Let's take this off so we don't get this in our way. Let's remove the watermark. We know what we're looking at here. We're looking at TLT. Let's go to the monthly really quick. I want to show you something. Okay. And the reason why I point out the bond market is because the bond market is going to appreciate even if the Fed cuts. The bond market's going to appreciate as the global, not just global, but as the US economy continues to weaken. The US economy is weakening, it is softening. Bonds go higher on during recessions. Going into recessions, bonds move higher. Okay. And this trend has been accumulating, right? We're finally breaking this trend that's been 2 years. So bonds are starting to break out for the first time. This is probably the only RSI that you're going to see on the monthly chart, the bigger term chart, where the RSI is breaking out, is accelerating, right? The RSI is picking up on the monthly chart. You go anywhere else, you're not going to really see that. Okay. If we go to the Qs, watch the RSI on the Qs on the monthly chart, it's there, the RSI is, can the Qs go higher? Sure, we can still trend higher, but the momentum is not here. The momentum is not here yet. It needs some more consolidation. It's a little overheated. Okay, it doesn't mean it can't go higher, right? Obviously, we can go higher, but it's overheated a bit. So you're probably not going to get an explosive move while these risks stay in the system. Kamala Harris, right? Kamala Harris is elected. Well, guess what? Very negative for markets. Markets don't want to see Kamala Harris in the markets. It doesn't matter your political views. The tax pressure, right? That increase in tax rates is terrible for markets, period. You don't want to see that. So the Qs running out. Let's go to the S&P, right? RSI is already kind of overstated. Let's go to IWM. Small caps look better. Small caps look a lot better. And you can go to the individual stocks within the small caps. Small caps are above the midline. So yeah, the momentum is starting to reaccelerate, especially with rate cuts coming into the cycle. We're entering a rate cycle. So you still have room for small caps, right? But TLT long bonds are very subdued, coming from the very low level, they're starting to reaccelerate. So I think there's a big momentum play here for TLT. And you're also hedging the economic risks. And a lot of people say, well, stocks are going to collapse if there is a recession. Well, bonds will accelerate during recession. So keep your eye on the bond market. It is now breaking out. We're getting that reverse head and shoulders also. So the pattern is there. Okay, the pattern is there for bonds. You're getting that reverse head and shoulders. You're getting an accelerating RSI. And I think the first target is somewhere around 108 to 109, maybe 110, especially going into the end of the year where we don't know what's going to happen. We really can't tell. There's too many things going on at the moment. right? Small caps look pretty good. KRE looks pretty good. So we'll go through the rest of that, but I just wanted to point that out here. Now, what are the conditions we're looking at also for the market? Let's take a look at the other conditions. No, not industrials. Let's take a look. Industrials look pretty good. Let's take a look at the internals. So at the moment, the market is strong. We have, let's switch this chart up a little bit. We're going to take it here. We're going to turn this into a line so it's a little easier to see. Let's turn it into an area. There we go. So you can see that this is how many stocks are moving above the 50-day moving average, right? That's just a good baseline for the market breadth for how many stocks are participating in this rally. And we're at about 70%. So about three quarters of the market of stocks are above their 50-day moving average. Strong, very strong. But you don't see the S&P breaking out. You don't see the Qs breaking out because a lot of that strength is coming from home builders, industrials. We're going to go over that. Maybe copper stocks, right? Anything that is even real estate, interest rate sensitive. That's where the strength is heading into. So I think over the next couple months, as we price in these rate cuts, it's very possible that the Qs and the S&Ps go higher, but not very much, right? They might be consolidating a bit until we get more clarity on who's going to be elected. That's going to make a big difference there. Who's going to be elected? So you got 72%, all right, of stocks moving up, but the S&P is a little subdued. All right. Now, credit risk. A lot of people are worried about credit risk. This is the barometer for credit risk. Is there credit risk, right? As in, are there, is a possibility of companies defaulting on their loans? How big is that? We should see this come down now. When it goes up, not good. When it comes down, that's good. It's probably now that the Fed is cutting rates, it's probably coming down. We're not too worried about credit risk at this moment because now the Fed has made it clear they're going to cut rates. They made it clear they're going to ease financial conditions, and they're already easing to some degree. So, hey, there's going to be an explosive move over the next 3 months for something. I think it's going to be crypto, and I think it's going to be interest rate sensitive names, including small caps, right? So let's take a look here at some of these. We're going to go actually to the in play. Should we go to the in play? I want to show you a couple names. Let's get back to the regular candlesticks. So these are the big names. These are the big trades that I kind of see happening at the moment, right? Number one is, it's not really number one, but it's up there, the bond market. Okay. The bond market is picking up technically. It has the fundamentals behind it. The economy is still weakening. Inflation is done. Inflation is subdued. We called this months ago. We said, hey, inflation by August, by the end of the summer, it's going to be done. Shelter's coming down. We're not talking about prices. We're talking about the rate of appreciation. We're talking about in terms of the stock market, the rate of inflation, the rate of those prices going up is pretty much not, it's not accelerating. It's done. So you got TLT up here. You got small caps, which represent the interest rate sensitive. Let's go to the weekly chart. This is a little too far back. Small caps representing the interest rate sensitive names. So IWM. Okay. And there's some other names out there, but IWM staying pretty strong in that RSI. We're still in the upper limit. A lot of momentum for small caps, especially after that unwind from the carry trade. So a lot more entries there. All right. Small. Now this is KRE. These are regional banks. If something were to collapse, it's going to happen in the regional banks. KRE represents, it's an ETF for the regional banks. Those look, there's a big short squeeze here also. So these can really squeeze. I'm not too confident getting long KRE yet, but I believe it is one of the most shorted ETFs by far. If the Fed cuts rates, it's probably going to explode. We'll see. I'd rather be exposed to IWM though, just because who knows what happens with the regional banks. You could get a collapse here, how we had in the banking crisis. There's still some risks from commercial real estate. So we're not too clear on that. Home builders are absolutely moving higher because they are sniffing out the, their construction activity, home building activity is picking up. Financing is going to be lower. So now they're going to increase their revenues. They're going to increase whatever they can. We see mortgage refis going up. A lot of people are anticipating those rate cuts. So the home builder sector is picking up. All right. One of those stocks is DR Horton, breaking to all-time highs. and very strong trend. I wouldn't chase it, but it's just giving you, we're seeing the conditions for very strong home builder stocks. Interest rate sensitive. KB Homes, another home builder, moving higher. I don't know if the chart looks that great. I guess it has some room. It has some room to move up. Who knows? It might get stuck. I don't like that chart as much. I think it's a little over. It's a little overdone. Toll Brothers. Okay, Toll Brothers still moving to the upside. Very strong name there. Let's take out BLDR. I don't know what this is, but I like this trend. This one looks really good. This is BL, ticker symbol BLDR. Builders First Source. It's probably one of the strongest home builders that I've seen that can really start to move. So I'm taking a look here. We're now breaking that resistance, and we're pricing in rate cuts. At this point, you're pricing in rate cuts. We're above that line. There we go. So it's starting to break that previous level, starting to look good. Lennar already broke out. This one's already broken out, so it's a little overdone. But if it consolidates there, it looks good. Home Depot represents, that home builder sector. Home Depot's trying to reaccelerate. It has a pretty good trend here. I like it. Are we back on the log chart? Let's go back to the log. I don't like that. There we go. All right, Caterpillar is going to be that industrial stock. Now keep your eye on Caterpillar, because Caterpillar has very explosive moves when it actually moves. It has explosive moves. So for all those home builders, what are they going to need? They're going to need more financing. They're going to need more construction. You also have the Inflation Reduction Act, which needs more construction. You have the infrastructure bill that is going to be, calling on Caterpillar. So Caterpillar has a lot of catalyst behind it, and you can see it's not overheated yet. So there's still a lot of momentum waiting to come into this name. I'd keep my eye on Caterpillar. I like, I guess I would say bonds, small caps, home builders. But who's the best home builder? I don't know. Maybe you just go with the ETF. But Caterpillar as an industrial name is a good play here, I think. If you're looking 3 months out, I mean, that thing can break pretty easily. So I would keep your eye on Caterpillar. There's probably some other industrials, but this is a solid name. And now you're going to need mining and materials, right? You're going to need the base materials. What is the most in demand material? Copper. So this is a copper stock where I like the price action here. The price action looks pretty good. It's been the hottest copper mining stock for a while. And that momentum is now starting to pick up from the midline. I think the daily it completely sold off. So watch copper. You're also seeing the price of copper starting to pick up also. So this is all these things trickle down. All the money, the flow of money is trickling down, right? And the market's going to expect that ahead of time, but the flow of money is going from the flow of money is, starting with these rate cuts is going from interest rate sensitive names, regional banks. They can start financing, they can start M&A, they can start doing all these deals. Real estate picks up, home builders pick up, construction picks up, now materials and copper picks up. So the flow of money is going into all these names. You just have to keep your eye open and kind of know what the narrative is. Don't be buying dead stuff. I think crypto is next. These are some other miners. I'm not too interested in it. Now, the other narrative is AI. The AI narrative is still alive and well. And one of the best names that I've seen is this Constellation Brands. Not brands, my bad. Constellation Energy, because they provide electricity for data centers, and their revenues are not going anywhere. Their revenues they had a pretty good report. Everybody got crushed during the Japanese carry trade, right? That nasty Monday. But I would keep your eye here on this sleeper here. I like that. I like the copper and the not energy, but electricity names right here. Constellation, very strong trend over the past 6 months. I mean, this was the strongest utility stock. And now that you get rate cuts, well, that's just going to be more infrastructure build, right? Now, if we move over to the mega caps, you have a Meta, right? Out of all Apple, Amazon, Microsoft doesn't look bad, but Meta is consolidating. Meta still hasn't broken out. It's like Meta in Tesla, but Tesla, Tesla's a little tougher. Meta is very clear. We are knocking on that resistance here for Meta at about 540. And if you think about what we're heading into, which is a lot of revenue through social media from, politicians. So I think Meta has a really good setup, and they don't really care about interest rates. They don't care about inflation. Meta's pure software. And can it come down? Sure, it could come down. It looks like it's forming, but wait for that break. When Meta breaks, Meta's going to break. So when out of the mega caps, I like Meta and I like Amazon. They should both be benefiting. Amazon just continuously making more, taking more market share. And you also have Amazon Web Services, who is larger than most companies. When it comes to the chips, you got AMD. I'm really waiting for a pullback on AMD. We got long down here and got out of that, but I'm really waiting for AMD to find a base because AMD is really accelerating from the lows. You said PWR is another data center. Dimash, what up, Dimash? Okay. Quanta Services. Is this a industrial sector, engineering, construction? This looks like engineering and construction. Maybe it is, but from what I see, it says engineering, construction, industrial services, more like Caterpillar, where CEG is utilities. Oh, that's a pure data center. Okay, I see what you're saying. It's a pure data center. All right. And then for the consumer stocks, you have Elf, right? That's going nowhere. Elf is a very strong brand. You never get recessions for makeup. You know why? So Elf looks good. It's at the bottom of the range, starting to pick up. If you get the rate cuts, does it really affect Elf Beauty? Maybe, maybe not. Yes, maybe a little. I mean, it affects everyone, but I think Elf Beauty's kind of a hedge against anything happening. You're going to go higher no matter what. You just need the stock to cool off. Celsius is getting destroyed. I'd be careful here. I like Celsius. It has a good setup to basically mean reversion setup. You're reverting back to the mean here, right? Big long-term trend for Celsius. It's very oversold. We're coming into that oversold territory, but who knows? Who knows? I would get long, probably some credit spreads here, but are people still buying Celsiuses at the same rate as they were? Celsius has to lower their prices. So they're, it probably already priced in most of the weakness, but you can see it's starting to pick up the momentum a lot like CrowdStrike. So Celsius might be a good swing trade. I wouldn't hold it for too long, but it might have a good swing. It might have some potential for a swing trade. CMG, whatever. CrowdStrike already made its move. I got to take that one off. It might be a short. Robinhood will come back to, but the crypto narrative is getting stronger. Bitcoin is, and crypto in general are only picking up momentum, right? This is a pure commodity, only picking up momentum. If we come back here, it's really a huge, we're looking at a gigantic 3-month long. Oh, I guess that's a little too far back. Let's come in a little bit. We're looking at a big, gigantic wedge pattern. Okay. So I'm just going to sit it right there. This is a huge wedge pattern. This is the most bullish pattern you can really find in the market coming from the lows. I call this the dragon wedge. It looks like a dragon neck and it's just forming that head right at all-time highs, right at previous all-time highs. And I think this is going to be the trade when it comes. I've been waiting. I don't know when it was going to come, but now that inflation is breaking down, now that you're going to get rate cuts, you're going to get more liquidity slowly coming into markets. Bitcoin and crypto are going to be nasty. Bitcoin and crypto are going to be pretty nasty. So this is more so stay patient. Look at that beautiful wedge pattern. I think we're probably moving to 100K, probably like 84,000 and then 100K into the end of the year. And Bitcoin has its moves, only a couple days in the year that Bitcoin really moves. When it moves, it moves. It doesn't trend higher all year. It consolidates and it explodes. And when it explodes, it has gigantic moves to the upside. And then it consolidates and then it explodes. So keep out there. You got Ethereum trying to recover, Chainlink having a nice move here finally. Lots of partnerships with Chainlink. I still think this is the most underrated crypto in the market, is Chainlink. Most partnerships by far. And then Tesla, of course. I think Tesla is starting to wind up. It's finally cooled off considerably. So Tesla's starting to wind up. I'm looking for a big. I'm actually going to be. I mean, that is a nasty trend when it breaks out. It tried to break out, but Tesla's finally going to get rate cuts. Margins will increase. The cost of batteries are already coming down. So those margin increases are going to launch, Tesla investors right back into the stock. Institutions probably going to pile back in. You need rate cuts. You need rate cuts because automobiles are financed; they're not bought in cash in general. So Tesla is winding up, and when Tesla moves, I think it's going to 300 pretty quickly. I think it's going to go to 300 pretty quickly just from the margin story improving. And it's quiet right now. Nobody's talking about Tesla. Very quiet. That's when it's time to keep your eye on it when it's quiet because the spring is starting to coil up. So you have crypto, that narrative is coming regardless. So those are the names that I would be looking at. Let's go to see where the S&P is looking at right now. Let's go back to the S&P. I want to see how we're trading intraday. Oh yeah, we're getting stuck here. Okay, let's pick this up. The VIX coming down. All right. Tesla October 10th. Yep. Mara. Hey, that is a good one. Mara, last year market bottom in October, similar to this year, no given Fed cuts. Last year market bottomed in October. So the bottom of October, that trend where the market usually bottoms in October, it's literally tied to an event. The fiscal year for mutual funds ends in October. So they do a lot of tax loss harvesting. They sell a lot of their, they sell all the stocks that they're down on or all the investments they're down on. It could be an ETF. They basically sell. So they stop, the selling pressure ends in October because their fiscal year ends in October. And yeah, that's usually why the October, things bottom in October. It doesn't mean the bottom will have to be in October. It just means the selling pressure will pretty much end in October because those mutual funds, those institutions are going to be buying back, for an advantage. They're going to be buying back the stocks that they've been selling so that they don't get taxed on them. They're trying to save money. So that's why October is usually the bottom. This year's a little different because you have an election, right? You have an election. So that's going to cause a lot of volatility. Like I said before, the market does not want Kamala Harris. The market wants Trump because of corporate tax cuts. And, price gouging is not great for margins, even though it's not really going to matter too much for big caps and tech. But yeah, those tax, I don't even know how you'd be if you're a stock market, if you're in the markets, I don't know how you're voting for Kamala Harris. You're voting to be broke pretty much. And I'm not trying to be political, but those are the most aggressive tax hikes in history. By far, it's not even close. So is it going to crush the market? Well, it's going to crush momentum. The market doesn't want to see that. That's why we're not, the Fed just tossed up rate cuts, but the market is not broken out. There's too many risks. Is the economy going to fall apart too quickly? It's a leveraged economy. The economy is very leveraged. Therefore, just because the Fed cuts rates doesn't mean it's going to save all companies. It means if the Fed cuts rates and the employment picture is still, pretty stable, if GDP is still pretty stable, we're good. But we still have a lot more data going into the next, rate cut. We know the cut's coming. The question is, does the economy fall apart going into that cut, before the cut, or does the economy remain stable? I think the market wants the economy to remain stable. If we have GDP come out, next Thursday and it's starting to plunge, the market's going to say, Powell, you need to come in and do an emergency cut. He's not going to do that. He's going to wait. Either way, the market's going to sell off because you still have, Kamala Harris possibly leading in the polls. Let's check that. Let's see where she's at. You also have the Bank of Japan starting to reiterate that they're probably gonna hike rates. That reduces the carry trade. The Japanese carry trade, the trigger It's a global margin call, basically. You know what a margin call is. If you guys are in the markets, you get a margin call, you don't have enough collateral. Well, the margin call came from the Bank of Japan hiking rates. They said, "Hey, we're not going to hike rates no more." And now they're hiking rates again. Well, they're not hiking yet, but they're saying, "Hey, we can still rate hike, I'm sorry. We can still hike rates if the data comes in too hot." So that's uneasy for the market. If the Nikkei starts to plunge a little bit, I wonder what the Nikkei is. See, where's the Nikkei at? Did it respond negative? Yeah, I would keep my eye on the Nikkei. It looks like it did plunge a little bit this morning. What is the, let's see if I can find the, I want to see if how the Nikkei 225, let's see if we can find that. I want to see how it reacted. Okay, here we go. This is the Japanese stock market. Yep, see? And you have, I mean, they don't have a pre-market, so it looks a little different. But on the 3-minute chart, you see the Nikkei, the Japanese S&P basically got crushed. Is that really crushed? I don't know. Let's see what the daily looks like. Okay, so this is the carry trade, right? Japan hikes rates, the carry trade unwinds, the Nikkei gets crushed, it recovers, but you can see on a technical basis, if you guys have any technical fluency, that looks like resistance, right? You still have a lot of resistance there. And if the Nikkei continues to unravel, guess what? People are going to unravel the carry trade again. And you might have another shock. So I'd be watching the VIX. You can't keep track of all these things. You just got to watch the VIX. The VIX will tell you something's going on before any of us know. So the Nikkei needs to break out. It needs to get above these levels. And until it does, I would say the Nikkei might be in trouble if they hike rates again, because that means people are going to be selling US dollars and selling stocks unless they already unraveled. And they're going to have to buy back the Japanese yen. And if the Japanese yen explodes, here's the Japanese yen, right? It's starting. This was the carry trade. This thing going higher was basically a deleveraging event for the market. And you saw it came down, the market's recovered. Now it's starting to pump higher. It's still holding higher. So this is the unwind. If this continues to break out, not good for markets in the short term, not good for markets. So there's too many risks for the market to just go explosively higher. Plus, we're already up a lot, right? The S&P already made a gigantic move, up 8-9 days in a row, and consolidating at the resistance line. So I think we have some time. I think we need to consolidate for the S&P for risk assets in general. So the Nikkei, yeah. So I didn't know that the Japanese Nikkei declined this morning. Can I go back to that? There we go. I gotta save this just in case. It wasn't a big drop. It wasn't that crazy, but you can see the Nikkei did react to. It wasn't that crazy of a reaction. I guess you got to stay tuned to see if it continues to decelerate. But yeah, the Bank of Japan. Now, before, what was I going to go look at? Man, I'm over here all over the place. I was going to look at the odds. There we go. Yeah. The odds between Trump and Harris. Let's see if I can find them. Throw them up on screen really quick. Here we go. What do you believe has the best chance of winning the election? No, that's not what I'm looking for. How do I make this bigger? What is the difference between these two? Betting. Okay, these are betting odds. All right. Well, how do I go to this chart, man? I want to see the chart. All right, I'm going to pull it up on YouTube. So, the art predict. Okay, these are two different markets. All right, there we go. So you have let's look, these are two different markets. Look at the top side. So on the upper wish I could click on this. On the upper side, you have Trump in the red, who is below Harris. I guess these odds keep changing. Last night they were different. Either way, as long as Harris leads, the market's going to be a little uneasy. It does not want those corporate tax hikes, basically. It's basically a rate hike. You're removing liquidity from the market. You're crushing investors. And that's going to crush investment. I mean, that's not good. You're making the government bigger and bigger and bigger, and they suck at they don't produce goods and services. They're not good at that. All they're good at doing is starting wars and implementing more regulation to fatten their pockets and pretend like they're helping people. You don't want bigger government. So anyways, yeah, we'll see. These odds probably change, rapidly, but keep your eye on those odds. If Trump starts leading in the polls, the market's going to get a little bit of tailwind, right? It's going to be a little tailwind if that does happen. So we'll keep our eyes on that. This is also right here. You guys aren't able to see that on TikTok. Let me switch this up to the S&P. There we go. We'll just stick on the S&P right now, trying to retest that level. So right here, this is the fund manager's exposure index. So basically tells us how invested active managers are, right? Active trade, managers who are buying and selling, rebalancing their portfolios. And usually when you get up to these levels, 100 is fully invested. 100 means, hey, it's probably time for a pullback. We got to pull back in the market every single time. Let's remove that moving average. We got to pull back here. What was this? This was December. You had a pullback. This was March. We had that correction in March. This was in May. We had a small correction. And then this one, we just called recently. If you go back, we said, hey, we're fully invested. The Fed has not cut rates yet. They haven't signaled it. Now we got it. And we had that big correction. So we're kind of at the point where the market would start to reaccumulate. I don't think it's over yet, though. I think there's we need NVIDIA earnings. We need to see GDP. We need to see how much the Fed hikes. So I don't think markets skyrocket. I just don't think they skyrocket. You need a peace deal in the Middle East. Is that coming anytime soon? I doubt it. A lot more uncertainty. We need to know, who's going to win the election. So I don't expect the S&P to skyrocket, but small caps can, because small caps are very underowned and they're going to go higher anyways. They're just, their revenues are going to explode with financing. So we're finding resistance here. So that's that active fund. What else do we have up here? There we go. Yeah, lots of resistance here for the S&P. So it needs to, yesterday's close. Now, keep in mind, if we opened at all-time highs yesterday, okay, not all-time highs, but, basically new highs on the week, and we got destroyed, market came down, right? Pre-market, I was like, damn, why are we so strong in pre-market? I'm not expecting the market to really break out like that. We get up here, boom, they sell again. So somebody's dumping supply at these higher levels. Somebody's buying it right back up. Obviously, duh, right? We know that. But my point is, there's a lot of resistance at 560, 563 for the S&P. Somebody's dumping on this market. And the question is, are we getting a lot of volume? Are we really getting volume coming into the market? I mean, this is SPY, so it's not going to be the same as the S&P, but pretty similar. And if we take a look here, let's match up that volume. We're not really getting a lot of volume. This candle, this is a kill candle, right? TikTok, don't ban me for saying that word. This is a kill candle. You get that consolidation at the highs. We're a little overheated too. I'll show the RSI in a second, but today is not a lot of volume. This is probably going to dump, and until Jackson Hole is completely done. So I'll be showing some clips here on TikTok, on YouTube, on Instagram, if you're on there, on what these Fed members are saying to kind of get some sentiment, because they're saying, hey, yeah, we're going to get rate cuts, but they're not sure yet. They're still not completely sure. They're still a little worried about reigniting inflation. And I don't think they really are worried about that. I think they just don't want to signal, hey, we're cutting rates. They don't want to say it right away. They want to ease the market into it. They want the market to ease for, and when I say the market, the bond market, they're really speaking to the bond market here. The bond market controls interest rates, long-term interest rates. The Fed only controls 24-hour rates for banks. They do not directly control 6-month, 1 year, 2 year, 5 year, all the way to 30 years. They don't control those interest rates. Those are controlled by the market. So when the Fed speaks, they're speaking to the bond market. They are speaking to the bond market. And we called this cut right in the newsletter. If you guys are subscribed, we said, hey, there's a rate cut coming. We called it back in, I want to say September or no, June. I'm sorry, back in June. Watch, let me show you really quick. It's a little, I mean, it's not really a brag, but just to show you that we're on top of things here. All right, so this is the newsletter if you guys want to subscribe to it. Okay. Dead cat bounce is the last one we talked about. I think this was a dead cat bounce, kind of like, hey, we come to all-time highs. We went a little further than I thought. But I think there's too many headwinds for the market to get too excited yet, right? But this was July 26th. So what, about a month ago, we said, look, it is time for cuts. We're looking at the data. You can go through it, right? There's a lot of stuff in here explaining why the Fed will cut in September. All that boring macro data, but it's in there. And that's why the Fed's cutting. So go subscribe to that. If you're interested, it's free. It's a free newsletter. If you just want to, if you think, hey, you might want to get another perspective on the market. Let's get back here. So anyways, point being, it looks like we're hitting resistance. And that candle, look at these candles. Usually when you get these type of candles, there's going to be some type of retracement going forward. Right. So I think we have a pullback coming. I'm still long. I'm still bullish. I don't think we're heading into a bear market like people say. This was the low. I think we probably come back to somewhere around 540. If you do Fibonacci, we're looking at what, 545? Worst case scenario, I think we're right here somewhere. Right? Somewhere around here. Let's take that volume off. I don't want to see it. Let's go to the 4 hour so we can look at the RSI, see how the RSI is moving. Okay. Now the RSI for the 4 hour chart has been very overheated. When things are overheated, the probability of a correction rise. The more overheated, the more probability of correction. So we're now starting to correct. Usually that RSI will come back to the lows, right? So we're waiting for that. We're waiting for that RSI to come back and retest the bottom. Not that it's it's pure technicals, but it gives us a signal. Oops, I got caught on here. See if there's any. I probably missed so many comments. My bad. Taxes on unrealized capital gains is wild. Woke go broke 100%. Is basically failing Americans to invest in the US. Yeah, Americans, I don't know how they're voting for her. It's crazy. The funny thing is, I don't know one fighter or athlete, UFC fighter, who would ever vote for that. I got to put on them, NVIDIA. You got to put on NVIDIA. Wanting NVIDIA to hit 127. What stock is this? I'm a little behind. You can say it again. I'll try to keep track with those. Anyways, yeah, RSI is a little overheated, right? That's a 4 hour chart. If we go to the 1 day chart, we still have room to the upside. But come on, are we going to blow off top? The market needs the damn cuts. We got the signal, we got the confirmation, but we're not there yet. We're not there yet. We have not got the cuts. It doesn't mean when they cut, the market explodes. The question is, where are we? Are we overheated or are we cooling off going into the rate cut? If we're overheated going into the rate cut, I don't think we're going to blow off top. If we're cooling off, right? If the mark price action is falling to support, and you get that RSI retracing back, cooling off, right? Buying pressure is cooling off. They're waiting. They're anticipating. Okay, yes, we got the cuts. The market, the economy is not falling apart. We're not heading into a deep recession. We're cooling. Boom, market goes higher. That's just a probabilistic way of looking at the market. And that could go wrong. Maybe it does just keep trending higher, breaks out, waits for rate cuts and goes higher. Maybe. I just think that's a lower probability. So That is our resistance right here for the S&P. Our resistance is 5,600-ish. You could say 56.3, whatever. It's pretty much 50, 56. And I got shorts there. I don't want it to go higher. So I'll give you my bias. I've been short on the market for about a week, and it's been going against me. It's been going against me. And I don't want to, I want to stick it in there because I still, I could be wrong, but I think we have a retracement or more consolidation. If we consolidate at these levels longer, and I see, they just continuously buy this 555 on the S&P above these levels, then, I'll exit the short. But right now I'm going to stay short until I see, more clarity. We still have a lot of macro data coming in. Let's see. What do we have specifically? Durable goods. Tomorrow, we have durable good orders. Okay. That is a forward looking indicator for the manufacturing sector. And it looks like trash right now. The ISM manufacturing looks like trash. So if those durable goods come in lower, it's going to signal, hey, we're decelerating, Fed, Powell, we're decelerating. What are you going to do? We got housing prices. That's a big one. Next Tuesday, this probably is what the Fed is looking at the most, is going to be the housing price index. Housing is starting to slow. This is what they're worried about. They know inflation as a whole is coming down, but it's shelter inflation that they're concerned with. And even though shelter inflation is decelerating, home prices in general, if you do the home price measurement, they are still pretty elevated. We're going to take a look at that here. Tuesday's probably going to be a huge data point. Right. So here's what I mean by home price index, are the FHFA house price index. Just a fancy word for our house prices on average. Where are they at? 423,000. Way too expensive, but that's where we're at, right? So March, they reaccelerated. This was, the market was doing good. Okay. Housing price index jumped. The market got scared. Okay, is inflation not going to slow down? It slows down. Okay, we're looking good. Goes up again. This month, it moves sideways. So we're going to get this reading next Tuesday. This is going to be what, June? For June, it looks so far back. It's very backwards looking. If it's lower, the market rips, in my view. If you get this lower, the market's going to rip. If it goes, because that gives Powell more room to cut, or more urgency. My bad. It gives Powell more urgency to cut if he sees that home prices are coming down. And the market is very urgent about cuts. The market wants the cuts. It wants assurance you will cut. If it accelerates, that puts Powell in a bind. He'll probably still cut, but his confidence about reaccelerating shelter inflation or these sticky parts is going to be worse. So his sentiment is going to be, it's a continuum. It's not red. It's not black and white. If the data gets hot, if the data is a little too hot, Powell's going to be a little more skittish on cuts. Not good, because this doesn't signal economic strength. It just signals overheating. But if you have economic strength, like the employment report is stronger, that's good. That's not bad. That's not overheating. So yeah, I'll take a look at that on Tuesday for sure. What else do we got here? So durable goods on Monday. There's nothing here. I mean, it's Friday. We don't really have much to look at other than what the Fed has to say. They're not going to say anything surprising. Any good data? Next Thursday is GDP. I mean, you have Nvidia earnings too next week, so that's going to be the second narrative, the other catalyst for markets. GDP growth on Thursday. And what else do we have? More initial claims data. We got PCE right after that. Most of the data should be in favor of the market. It's just really tricky at this point. I think we need a correction. I don't know when it's coming, but I think we're going to get that correction. Although the market is holding strong here. Really hard to tell what we're going to see. The Q's definitely not. Look at the Q's. Like, there's a rotation happening at the moment. We're seeing the rotation. The Q's are weakening into this data. The bond market, I like the bond market right now. It's been climbing tremendously. It has that momentum behind it, because if things weaken, the bond market goes higher. If the Fed says, hey, we're cutting for sure, well, rates come lower, the bond market goes higher. And it's coming from historic lows. Small caps exploding. This is the rotation. This is the rotation we're seeing. Do you chase it? Sure, whatever. You want to chase it, go ahead and chase it. But big tech is rotating into small caps. I have another way of looking at it too. This right here kind of tells us what's moving up the most. This is all sectors. You have you have the Qs. So you have Nasdaq, you have bonds, you have consumer communications, you have energy, you have financials, you have home builders, you have industrials, you have real estate, we have consumer staples, you have semiconductors, you have utilities, you have. I just want to go through the whole thing, and you have small caps. So who's leading? That looks like home builders, and I bet you this is small caps. Oh no, that was home builders. Okay, home builders and small caps. That's leading today. So you have a rotation into home builders and small caps. Sorry, you guys can't see it on TikTok. Got to move this thing around too much. The House, the House issue is part of 2017 tax cuts. They expire this year. It will be bullish. Okay, hopefully. And then who's underperforming? Consumer staples and the Qs. So you're getting that rotation. How would I play that? Well, I mean, IWM's already taken off. Damn it. I should have got into this earlier. This thing is strong. I missed it. But I'll look for a retracement. I'll look for a pullback. We're already above this resistance, filling that gap. Yeah, small caps are climbing. I don't think this is going to change. I mean, Tom Lee's calling for 300 on small caps by the end of the year. That's a pretty strong claim, but if he's right. And then what do we got? The VIX is declining a bit. Okay. Is gold finally breaking out again? Gold is slowly climbing. There's a lot of demand for gold. I just saw your comment. What up, Isan? Been a minute. How you doing, man? Justin Webb, you're saying PRZN. What is that? PRZO. PRZO. This is a electronic equipment. What is your catalyst here? There's a lot of these trash penny stocks, and maybe 1.001% of them actually go higher. Okay, AI drone. Oh, AI drone technology. Okay, that's interesting. AI drone technology. That's a possibility, especially where we're headed, right? So PRZO AI drone technology. That's pretty cool. They got 50 orders from the military. Well, they're going to need about 500,000. No, I'm just kidding. Yeah, that could pop. I mean, it's definitely could pop. Oh yeah, KRE is exploding. And I know we have a lot of short interest on KRE. Where's the Oh, I have it on the side. KRE short interest. Look that up. Hmm. Here we go. The most heavily shorted ETFs. Number one is XRT. I think that's retail. KRE is number 3 at 80%. So we're looking at KRE, which is a big part of small caps. A lot of regional banks in the IWM, but the difference between this and IWM, this is more risky. It has an 80% short it has 80% short interest. So 80% of the flow, 80% of the shares are being shorted. Now, if the Fed is cutting rates and this gets squeezed higher because, regional banks need more lower rates to increase financing, increase the demand for borrowing, basically, and their interest margins go up, so their earnings should be better, this could be a nasty move to the upside. Probably going back to all-time highs. What is that, like 74? I don't know if it's that great of a risk reward, because it seems like it should go up more, but I mean, it's a lot of short interest. So I'd watch for KRE, IWM, anything else on there that's pretty much shorted. IYR, that's a real estate fund. I'm going to stick with these though. That's why I have KRE on my list. I have KRE and IWM and then ITB. So I think the hottest ETFs are going to be ITB, which is home builder, construction, KRE, regional banks, and then IWM, which IWM has a lot of biotech. I didn't really know that, but it does have a lot of biotech. So those are the 3 ETFs that you might not that you might want to get long on, but that might be stronger than the Qs going forward. Tesla, AMD, yeah, we'll take a look at Tesla. Tesla is consolidating at the moment. I know I marked up Tesla. I'm going to look it over here. Tesla. Okay, here we go. So I'm looking at Tesla in this box for now. Okay, if we take a step back, yes, it has, when it breaks, it's going to break. I mean, that's a huge descending wedge or descending flag pattern, whatever you want to call it. Okay, and it looks a little better if you do this. It's a little easier to see, right? You kind of have a reverse head and shoulders also. Starting to form. It's sloppy. It's not the cleanest, but it's a long-term chart. We'll go back to that log chart. Oops. Go back to the log chart, zoom in. Tesla's forming another wedge from those lows. I mean, you could drag it down here. I'm going to put it like right here. Right? This is probably the path for Tesla. A little more consolidation. But rate cuts are definitely going to be good for Tesla. So I would say if you want to, go fishing somewhere around 185, 190, I can see it coming down to 190. That might be a good fishing period. And if it starts to break above 230, in my view, if we get above 230, you got momentum to the upside. If we turn on the RSI on the daily chart, it is starting to pick up momentum again, right? From those overheated conditions, it kind of cooled off. It's starting to pick up. So I would look that over 230 on the weekly chart. If we take a step back, it is supporting that middle band on the RSI. So it's still strong. Rate cuts are only going to reaccelerate the business for Tesla. So I like Tesla there. That's what I look at, those levels, 230, 190, or else it just moves sideways for a while. AMD, big monster move to the upside. I would say because AMD, the chip cycle, I would wait for October. I think AMD is going to, I don't know this for sure, but I think AMD has a little bit of time to consolidate. I think the chips are a little overstated. We'll know for sure on August 28th. Once NVIDIA reports, chips are either going to reaccelerate or they're going to stay sideways, right? They can still move up, but there won't be a whole lot of momentum. So I think you got to wait till August. You can see AMD's had a bullish trend for the last 3 weeks. Or 2 weeks. I'm sorry. It's like 2 weeks, right? Last 2 weeks. Pretty bullish, but it's starting to consolidate. Does it stay above the anchored VWAP? Or does it come back down here? I'm not too convinced. AMD is ready to break out today. I would be more confident if you see a move like this, right? Another big move, and then you see that green candle pick up. So I'd be a little more confident there, but that's what AMD is looking like for me. I'm still waiting on it. It's a good. I mean, they made that new deal, right? They have the green new deal. No, I'm just kidding. AMD is starting to acquire some other smaller companies to accelerate their business. SMCI, I do not like this at all. SMCI, I'm gonna tell you right now, the chart for SMCI overheated. I don't like it, and I haven't heard good news about SMCI as far as their business. This looks like a short. This looks like it's very bearish or sideways. It's gonna take Nvidia earnings. You got to wait. What is Nvidia earnings gonna look like? Is it gonna reaccelerate the whole theme? If not, SMCI looks nasty to the downside. It looks like it can try to retest and just dump. So I wouldn't be long SMCI at all. I'd be more interested in purely Nvidia and AMD. Nvidia could be showing some more weakness and he needs a little more consolidation. Also, the valuation is high. Yes, the earnings are strong, but how much did it price in future earnings? This gigantic move to the upside, 3 trillion valuation. How much did it already price in? And you're heading into a chips overproduction cycle, so there might be a little more supply. The chip prices come down. Earnings, it hurts a little bit of earnings. EPS comes down. The business is still strong. It's still a monster, but the cycle is overheated, right? So you need that to cool down. So I think you got to wait here. I'd still be more interested in AMD over both of these. TSMC also. Oh, T tripping. What's wrong with this? Let's just go to the chips. Oh, TSM. Why am I saying TSMC? Yeah, these look like consolidation patterns here. When you sell stock, do you keep a certain percentage? When you sell a stock, do you keep a certain percentage? I don't really understand your question, Chris. I mean, if you sell the stock, I hope I keep the whole percentage. So maybe I'm just a little unclear on your question. Warbound Israel company. Okay. Yeah, no, that makes sense. Justin Webb, that's a good thesis there. That makes sense, bro. That does make sense. Okay. All right. Where are we at here? So TSM, ARM, MU, Marvel. See, look at these look like trash. Look at Micron just getting stuck right at the golden pocket too, right at the resistance level. I think chips need time. And that all could change with Nvidia's earnings, but it doesn't look so. And that's why the Qs are a little subdued at the moment. They're a little stuck here. I should have been short the damn Qs, not the S&P. S&P is a little stronger. So yeah, it looks like small caps are coming. Small caps are coming for you. Small caps, TLT, those are my picks. Small caps, TLT, TLT, IWM, KRE, ITB. What else we got? ITB, maybe utilities. If we do, what is the utilities UCL ULC? Oh no, XLU. There we go. XLU. Even though I don't like the index, it's stupid. Look at that. It looks stupid. But yeah, if you find a utilities company, probably going to be moving higher. Like, yeah, CEG. I like CEG. CEG looks good. Those are my picks. But yeah, the semis, I'm not really interested in the semiconductors at this point in the cycle. You really want to wait for those Nvidia earnings. You don't want to get stuck holding a bag for 2 months. And then obviously crypto looks beautiful. It's starting to reaccelerate. I know some XRP people are starting to sell their bags. Chainlink, nasty move. I mean, it always has a nasty move. Who cares, right? We want to see this thing break out of this big wedge. I still believe it's going to hit 100 in this cycle. I think Ave's been pushing up pretty strong. This is a finance. Yep, Ave's trying to. Ooh, so Ave might break out of this resistance. Okay. Maybe it's headed back for this level. We'll see. I guess he means you don't sell it all. Oh, do you don't sell it all? Maybe. You don't sell it all. It depends how you're trading. right? It really depends. If you're selling options, you might want to. If you're buying options, you don't want to just. If you're doing shares, yeah, you can keep it in there. But if you're trading options, you're gonna get that time decay, so you might want to sell it all, right? If you're a beginner, if you're advanced, you probably already have your own strategy. But if you have shares, yeah, you might want to get out 25% and then maybe 50% and then 75%. But it depends how big of a move the market actually, the stock or whatever you're invested in, it depends how big the move was. If it was a huge move, sort of like Tesla did back in, what was this, April? This kind of move right here, you want to be out 75%, see what it does. But if it's a smaller move, who has moved Walmart recently, right? Walmart, I mean, they had pretty good earnings. I was short Walmart too, all the way till here, and then they just gapped up. So, but I had a small option, didn't do anything. Walmart looks weird. So if it's a small, well, this is kind of a big move, I guess, for Walmart. Everyone had a pretty big move. Yeah, a lot of stocks had a big move. But if it's a smaller move, then yeah, I don't know. It depends. Enphase, ENPH. I haven't looked at this forever. Ooh, Enphase has bottomed. Enphase has bottomed. Enphase needs rate cuts. For all those solar roofs, they need rate cuts. That's for damn sure. Uh yeah, Enphase I don't think is ready. It looks like ZM. Hey, Zoom finally getting some push here. Look at that move on Zoom. The CEO resigned and the stock went higher. So they just didn't like her. They were just like, "Hey, we're done with this lady." Does it last? I don't know. You need some consolidation. Definitely need some consolidation here. What else we got? I think that's pretty much it. I think that's pretty much it. On a macro level, risk assets are ready to go. Market breadth is high. It's all small caps from here. It's all small caps from here. Until we get something changing. So watch Kamala Harris. So we'll break it down really quick. Let's break it down. Uh, so number one, the Fed is going to be cutting. Let me throw Bitcoin up here because this is going to be the real play pretty soon. The Fed will be cutting in September. The question is, do they cut 25 basis points, and do they just slowly cut, 25 each meeting into the end of the year, or are they going to have to hit 50 basis points? The one thing the market wants is certainty. What it doesn't want is uncertainty. So the market is trying to figure out how much are you going to cut, and how fast are you going to cut? We don't know because we need more data. That's why down there on the screen, you have jobless claims. Keep your eye out for that. If they're really bad, if the employment is really bad, the market's going to want to see faster cuts or bigger cuts. CPI is probably just going to keep trending lower. So I'm not too worried about CPI. That's probably not too unpredictable. We're going to get disinflation. We're in a disinflation regime. It's really the jobs number that we're worried about because mass layoffs can come at any time. And they kind of, yeah, who knows? We'll see how that plays out, especially with Harris coming, the Harris tightening. I call it Harris tightening or Kamala tightening, which is you're going to tighten finance. When you raise taxes, you're tightening financial conditions. You're removing money from businesses, corporations. You're tightening. Not good. So the market doesn't want to see Harris lead. That's another tailwind slash headwind, right? You got to price that in. And then you also have NVIDIA earnings. I really don't know what to think about that. I know the AI cycle is still ramping up. The question is, are they going to have to lower prices for chips? My guess is that Constellation Energy goes higher because they're going to show, hey, we're still spending like crazy. Apple, Amazon, Meta are still spending like crazy. So I don't think NVIDIA's fundamentals are going to crap. But the question is, are they slowing? Or are they reaccelerating? Where are we in the crypto cycle? For the crypto cycle, we're in macro, we're in disinflation, right? So inflation is still falling and growth is teetering between growth is teetering between falling off a cliff and reaccelerating. So in the moment, we're in macro. I would say we're in macro. We might be in macro winter, right? We're teetering between macro winter and macro spring. And the reason I say that is because growth is kind of not making a decision. I really think we're in macro spring, though. I think we're still in the early cycle of crypto where inflation's coming down and growth is starting to reaccelerate. Industrial production is not. Retail sales are slowing down. The ISM is slowing down. Services are still up there. But guess what? Crypto doesn't give a damn about the economy as much as it does financing and financial conditions. It wants liquidity. So the sooner the Fed cuts, the sooner we get to global economies needing to increase their balance sheets, crypto goes higher. That is crypto spring. And we're early stages of crypto. We're still in the early stages of crypto. I mean, Bitcoin is not even above all-time highs. This consolidation, this is the trade. I know I've been saying it for a while. I thought it'd come sooner than later, but it happened to be, summer for stocks. Now we're seeing small caps rip higher. Small caps are another proxy for risk assets, which mean they're more interest rate sensitive. They're sensitive to lower interest rates or higher interest rates. Now we're getting lower interest rates. Now the Fed, are they going to, reduce the amount of liquidity they're removing from the market? I don't know. We'll see. Either way, we're pretty much in crypto spring. We have the whole spring. We're at the beginning. We have the whole spring to go forward, and then we have the crypto summer, which probably comes after the election. That might be the strongest period going into January, February. That's my guess as of today. January, February, March. And then we look at the ISM. Is the ISM momentum finally starting to break higher? Once it does, we look for for things to blow off top. But we're still in the early stages of crypto. If you're in crypto, you probably already know that. But this consolidation is telling us that we're in a big consolidation. See, what do you got here? I bought 129 call Nvidia. What do you think? Depends. What is your expiration? Or is it a day trade? I wouldn't do any day trades. So 129 Nvidia, I don't know. You could be good. It just depends when your expiration is. Really depends on your expiration. Because you're going to get, just so you know, if you bought Nvidia calls, you're paying for a lot of volatility or implied volatility. You're paying a lot for that. It is. I'm pretty sure Nvidia is the highest implied volatility stock right now, or one of them. So as soon as earnings are done, that implied volatility is going to get crushed. Therefore, if the stock doesn't move, your contract's going to be down a lot. You don't really want to buy options when implied volatility is elevated. You actually want to sell options when implied volatility is elevated, and you want to go out further to collect that implied volatility crush. If you're buying options and you get crushed by IV, you better be long. You better have your dates, your expiry a little further out, because if it expires in the next week and you went long and the IV gets crushed, you're done. You need Nvidia to explode, right? So that's a low volatility trade. That's my thoughts on that. If you're long Nvidia, make sure your expiration is out further. It's going to cost you more, but you're already paying for high volatility. So I would wait till after earnings to buy Nvidia. They're too expensive. The implied volatility is way too high. Yeah. Hey, that's all we got. Appreciate you guys joining. Watch out for the next employment report. You have CPI, you have GDP, you have employment. Take a look at the VIX. Is the VIX going to get to 20? Is it going to get stuck and come back down, or is it going higher? Who's going to lead in the polls, Harris or Trump? Watch the polls, the betting markets. And other than that, we're just waiting to see, we're really waiting to see how much the Fed cuts, 25 or 50. The cuts are on, though. Appreciate you guys. Stay blessed. Subscribe to the newsletter. If you're not, we'll have something in there for you. And we'll catch you guys later. Stay blessed, lift weights, eat healthy, learn something new every day. Hey, appreciate you guys. Astronaut, you too.